Hello guys, welcome to the very first Forex beginner course 2.0. So we are going to start the lesson with the Forex terminology. So we're going to start with just the basic terminology behind Forex. And then the first terminology is what is Forex? So, guys, Forex is an abbreviation for foreign exchange, and it is the largest market in the world with a volume of over 5 trillion a day in exchange. And then Forex market is consisting of your currencies such as your US dollar, your euro, your Great British pound, and others. Uh, they are aware there is a huge demand and supply, meaning that this is where most volume of the market of the financial market it takes place. Where I can say, for example, say that USA is trading with the South Africa, where there is a huge demand on South Africa and then a huge supply for on the USA, or a huge demand on the USA and a huge supply on the, of course, on South Africa, is etc. Vice versa, is something like that. So this demand and supply actually makes the financial market, or makes the value of that currency to fluctuate. It fluctuates every now and then, maybe every 2 seconds or something like that. Just fluctuates. We call that price. Yes. And then, however, there are other financial market, such as the technology, which which usually, the technology is actually, let me call it indices instead of technology. And then you have your commodities, you have your stocks, you have your precious metal. And then how do we trade Forex? We trade Forex by buying or selling a certain currency against the other in the hopes of making profit out of it. Nah? So say that you see now that there's a possibility, according to the news or according to your technical analysis, is which is where we are going, that the US dollar might actually go down due to some certain factors. So what you are going to do, you are going to sell, or you are going to bid against the US dollar. So when the US dollar does as you speculated, you gain profit out of it. Or say that you see that now the euro, there's some good news in Europe. The market has been progressing. It is speculated that the euro will go up. So you go with the euro. So when you buy, and then it does go up, you make profit. But sometimes you can make a loss. Say that you buy a market, and then the opposite happens. That means now you are making a loss in the market. It does happen. They actually isn't 100% accurate strategy in the forex, that I don't know of, at least. Yes. So that's how it is. And then we use the technical and the fundamental analysis, of course, to speculate the price action, the price movement, everything. We just use the technical. The technical analysis is when you analyze the chart, and then the fundamental analysis is when you depend on a certain news to speculate your price action on whether it's gonna go up or down. Yes. And then our trades are placed by a brokerage firm on our behalf, and then with lots of benefits. Yes, actually there's lots of benefit from those, such as your leverage, loss protection, and others. And then but they charge commission. So these brokers actually, as an individual, you cannot go and trade forex without a brokerage. You need a broker. It's more like someone who consult the market for you, because the minimum you must have to trade in forex is at least uh, 100 US dollars for a lot. One lot is cost to 100 US dollars, and then most of us do not have such an amount. So what they do now, they enter a third party, which is a broker, and then sort of put it in the middle between you and the forex market. And then the broker, when you trade, the broker places the I mean the trades for you, and then in return they take their commission or the spread. Yes, usually when there's a spread, it means that now the blue line actually represents where the price is actually is, and the red line represents where your broker is. That means now the gap represents the spread charges. Now that is why usually when there's a high spread, there's high spread. They will usually, when you enter a trade, it will start at the big negative, and then when there's a small spread, it will start at the, yeah, small negative, something like that. And we will learn that as we go. We will learn that as we go. And then the types of market. The first one, we have the currency pairs, which is the one that I was telling you, the first and the largest market in the world is the currency pairs. And then, yeah, it holds the largest part of the financial market. And then they are basically one country's currency against the other. I think I have explained it. Yes, example, the euro against US dollar, a Great British pound against US dollar, Great British pound against Japanese yen, Great US dollar against South African rands, something like that. Those are actually the currency pairs that you usually find on your brokers. And then sometimes you'll find that the brokers have made different types, such as your micro lots, your mini lots. It depends on, yeah, it depends on how you wish to go to it, you wish to trade. And then when US markets are getting stronger than the other country, this is actually the story I was telling you. When the US market is getting stronger than the other currency, say that the US dollar against that currency is likely to go up. So if you see a pair, and then the US dollar is getting stronger, it's getting more, it's going bullish. That means it's going up. Bullish means it's going up. Then you will see, you are likely to see the currency pairs that starts with the US dollars going up. It can be US dollar versus Japanese yen, US dollars versus South African rands, etc. As long as you see that, you know that if the US is gaining momentum, if the US, the buyers see to it that they want to buy US dollars, it will gain momentum, and it would have to obviously go up. And then, yeah, it forms a bullish trend. I have also written it down here. And then uh, that currency pair versus the US. That means it starts with that currency pair. Let's say maybe it's Great British Pounds versus USD. It's likely to go down in this scenario because of now. The US dollar is getting stronger. So entirely what it means here is that the first currency pair, when there's the first currency pair that is against another, is the one against that currency pair. So if it's winning up, and then if that the first currency pair is winning, is up, and then if it's losing, it's going down, something like that. This is mainly but caused by the institutions, which are mainly the largest investors on Forex. Yeah, institutions are the largest investors in the Forex market. You have your banks there. You have your banks. You have those big companies that influences the real movement in the market, not the noise. Because of usually us, the retail traders, we tend to make lots of noise in the forex markets. Usually, that's why the market is not concise. It just goes in different positions. It has to grab some liquidity before it can go through a real trend. So when you what you have to actually see what you have to actually see to it is that you can sort of clear up the noise, and then look at what the institutions are actually doing. What are they planning? If you can actually read the mind of the institution, I'm telling you, you will make it in forex. So yes, and then instruments are offered by your broker to you in your MetaTrader and other trading platforms. Yes, we have a trading platform called MetaTrader. I will also do the tutorial of how to set it up, and then what is what, pips, from how to open your trades, how to set your trailing stops, and everything like that. I will cover it. And then there are other also platforms. You can have your terminal from your brokers. Your brokers have all their own terminals and other things. Yes, let's move on. So now the second one is the stock market. The stock market, of course, is the second largest market in the world. Consisting of many companies. These are companies that offer their share to the financial market. Yes, these companies actually offer their shares. That means that they place their shares publicly to people to do what, to buy or sell, something like that. Yes, so these actually are, you find them in the exchange, in the exchange, such as your New York stock exchange, your Johannesburg stock exchange, the JSE, which is in South Africa. The New York obviously is in the US. So yeah, you find thousands and thousands of such stocks. Of course, trading stocks is also a good way, of course, of investing. But if you want to trade stocks, I would recommend you to follow the fundamentals more than the technical. You can follow the technical, of course, but stock is mainly affected by the fundamental. And then also, let's say you trade Apple. Apple has a larger correlation with your S&P 500. If you would look at S&P 500, which is something that I'll speak about, and your Apple, actually you will see something that Apple goes with the S&P 500, is something like that, but it's something to discuss on other lessons, not now. And then yeah, they have companies like Apple, Microsoft, Amazon, etc. Many companies in the stock market. And then let's move. Yeah, let's move on. Okay, let's move on. So now we'll speak about your precious metals. Precious metals are part of your nature, part of natural resources, né? But they are specifically metals. It means that they took those type of natural resources, put them in their own categories, which there's a category called the commodities, but they sort of took them out of that. Of course, gold is a commodity, but they sort of put them aside because of they are metals, precious metals. Of course, they deserve their own particular market. So yeah, you have your gold, your silver, your platinum, everything that is your metal. Yes. So they are commonly bet against the US dollar because now usually the financial market is mainly controlled by the US dollar. The US dollar dominates the financial markets. It's over 60%. Yeah, it's over 60%, and then yeah, that's why it's called the supreme currency. The US dollar controls your oil, controls your precious metals, controls many things. And then examples of how they usually are. Okay, here are the examples. Your XAUUSD, yeah, which is gold, and XAGUSD, which is your silver, and others. You'll find them like this on your, what do you call it? You'll find them like this on your platform, on your MetaTrader. Yes, or similar type. Just search this, or if you already have your MetaTrader, you'll find them. And then commodities. Commodities, these are your natural resources such as coffee, weed, oil, soya. Yes, all natural resources, mainly those in farms, and yeah, those are your commodities. And then we have your indices now. Indices is more like a collective. Let me just do this. Yeah, these are essentially a bucket or a group of stocks, mainly the technologies as I've mentioned. I wanted to put actually indices, I put technologies there. So here is where you find your Apple, Microsoft combined together, Amazon combined together to form uh, one particular instrument. But there are many companies inside, of course, they cannot be just one, two, three. This is your S&P 500, your Nasdaq 100, your Dow Jones, your FSTE 100, and then they are safer. Yes, guys, this is one of the important things that you must know. They they are safer than stocks. Reason why they are safer than stocks is because now, if you can focus on one stock, say Apple, and Apple crashes badly, the market crashes badly, you know that when you have bought, you're gonna lose your lots of your investment. You can even blow. But if Apple crashes inside S&P 500, now it's not gonna be felt as much as it was felt. Say that Apple has dropped by over 50%. On the S&P 500, it will be around 10%, 7%. You see, something like that. It's a bit of a fraction. Of course, your indices are a bit more volatile. To be honest, they are volatile. They need someone who has enough money actually to trade them. You don't just trade them. And then, or a skillful person, of course. It's all about the skill in the forex market, of course. Yeah, you'll notice also that in this course I will not cover bonds, which are usually are your house markets, because I will not do any lesson where we analyze bonds, we trade bonds and everything like that. Yeah, I believe they are such a slow market. It's just for some people who are retiring. It's not actually for someone who wants to get money out of forex. You actually don't do bonds if you want to get money out of the financial market. It's like, I mean, come on. Okay, so I think I will stop here now with this lesson. I think I will stop here. Guys, please subscribe to this channel, of course, so that I can put more content, so that I can keep uploading. And then I will see you on the next lesson, which is, of course, which I will upload it. I don't know when, but yes, I will upload it. Of course, I will keep in contact. I will do anything. Full course for the beginner. It's not. This is not actually the. This is just the first part. I will also cover the second part of the beginner course, where I will go inside your platforms and show you how everything inside, and then we'll go to the intermediate, where we analyze and everything. But on the beginner, I just want sort of you to know everything. What is a candlestick? What is what is what, something like that. Then, so that we can, when we get to the analysis, you know very well what you're doing. So thank you guys. Please subscribe and share to your friends, share to someone who actually wants to see, who wants to learn about forex. And then let me know in the comment section of what you want me to cover. Of course, I will read your comments, guys. This is actually you can see the channel is just new. I will actually read your comments, and I will make sure that I cover that in the next lesson. So thank you guys. See you in the next lesson. Cheers.